Hey guys, this is Julian from J. Lewis Trading, and this is the audit for the week of the 15th May. So what we're going to do is we're going to first start over here on the daily chart, and we're going to look at some resistance points over here that were tested, and price action was definitely held down, double topping, and what ended up happening over here on Tuesdays, we got this huge pullback in the equities, and you can see that on Tuesday the Dow actually came off a substantial amount of points. I think we're somewhere in the 275 point range to the downside on the Dow, dragging all equities down. There was virtually nothing that was bullish on Tuesday that I was looking at anyways. So for the last little while, we have had price action ticking its way up to the upside over the last little while. I did not cover the audit last week, so this is kind of going to be a sort of a back-to-back review of last week and this week, and you'll see that price action was moving up for the most part over the last week and a half here, and came up to that level of resistance at 240.36 and did get above it on a very, very short-term basis, but the market was clearly overbought, and this thing sold off. And then there was some news Monday night that triggered a wicked sell-off on Tuesday, which is this sell-off right through here, and again a 270 plus point pullback on the Dow. Now, I personally wasn't doing any real trading until Thursday, so this will be relatively short, and I've got a few trades that were put on in the last couple of days, but it was not on the SPY or any other stock that I'd been watching. What I had personally been watching was the last couple of days. There had been some. Well, first of all, on Wednesday, we'll just go over straight to gold, and I will give you a snapshot of what I was looking at on Wednesday on gold. And with the equity markets pulling right off, or pulling back rather, you'll see that after hours that gold did move up, and there was a substantial move to the upside, and this is where I started to look at gold on the downside. So when the equity markets were pulling off, there was sort of a hasty sell-off because of some news, and people were selling off. And generally what happens is when you get a abnormally large sell-off, there's only really one of two things that happen. The next day that sell-off continues, or there's a huge rebound. And the way that I look at it personally is typically when you get an abnormal sell-off, like Facebook being down 3% and Apple being down 2%, and a lot of these other blue chip companies that were down a couple percentage points, that opens up a buying opportunity for other people that are sitting on the sidelines. And so in this day and age with the internet and things being moving a little bit quickly or more quickly, huge pullbacks in the market offer intense buying opportunities. So what happened was when the S&P and the Dow pulled back on Tuesday, on Wednesday, I guess, Thursday and Friday pretty much recovered everything. And you'll see here on gold is that it rallied up quite a bit. So this would be Monday right through here. There was a huge gap up Tuesday, and then Wednesday when the markets started to recover, that put some downward pressure on gold, and that was because the dollar strength was back online, and the dollar was moving to the upside, and so gold was pairing some of its short-term gains. So I really started to hone in on the gold trade on Thursday and Friday, and I'm going to go over with you on the trades that I was putting on Thursday and Friday. So here's Thursday, here's Friday, and we're just going to I'm going to take you into to Thursday. And what we were looking at right here was out of the gate on Thursday, price action had rallied up and had started to sort of roll over right through here. Dollar strength was up. Futures on the equity markets were also up. So that told me off the top that we were going to start to see some weakness in gold because it was a risk-on trade. People were going into equities. And so that was my cue to start selling gold. And by selling, I mean looking at some put positions. And so that's exactly what we started to do. There was this pre-market high, and it pulled back, it rallied, and it was held down below that overhead resistance right here. And this was the trade right through here. As soon as the market opened, it opened to the downside on some substantial volume, creating this intraday support level at 1940 right through here. And what I was looking at right through here was this wedge pattern right here, creating a bear flag, if you will. And when I saw that, accompanying with the stochastics being oversold and the strength being relatively weak in the uptick move, I decided to get short right through here. And as soon as it cracked this wedge to the downside, I was in. Now, yes, it did rally. The 50 period did a fantastic job of holding this down. And then you'll see that that 1940 level was tested, and it was taken right out. We had a bit of a dead cat bounce, and then it dropped even further to 1891. So around this section is where we were getting out of the position. But you can see right through here, and I posted another video about this on YouTube on this exact trade. So it's a little bit more focused on what I was doing through there. But this rising wedge broke, consolidated sideways, ticked back down, took out 1940, continued lower, and then created another pennant, and it broke down even lower from there. And that was primarily the only trade that was put on that day. So we were taking out that that support level, and that was the Thursday opportunity. Now you can see that in the back end of the market, this thing really took a nosedive and really worked its way to the downside. If somebody was a little bit more proactive, they would have been watching this VWAP area right here. You can see that the VWAP completely flattens out, and you can almost see in the background here somewhat of a complex head and shoulders. There would be the head, a shoulder, a shoulder. It breaks down and then ticks back up, rallies to the VWAP, and then is held down by the VWAP, and then it completely loses its shirt and trends down to about 1861, where it closes out. And so that was Thursday's deal. Now, between Thursday and Friday, there was some interesting movement in the U.S. dollar. And the U.S. dollar, while we were trading to the downside on Thursday, the U.S. dollar actually rallied very, very hard. And there was a huge flag on the U.S. dollar on the 5-minute chart that was not able to do anything. And it ended up sliding to the downside during both Europe and Asian markets when they were open. It trickled down to the downside. And so what we got over here on gold was, because of that pullback in the USD, there was instantaneous strength in gold. And there was a multi-trade position here today on the 1-minute chart in gold, or on gold rather, and this is Friday, and you can see that there was this massive gap up. And being a big fan of the gap trade, we were looking at this window right through here at 1912, and then the close of the window at 1883, and then I was also extremely interested in this 1951 level. Now, to start, as soon as the market opened up at 1951 and came down, the first position that we were looking at to the short side was right through here. And it was this bearish pennant right through here that we were looking at, or sorry, wedge, I should say, that rising wedge broke to the downside. And you can see that we had an oversold signal on the stochastics, and the RSI was just trending around the lower portion. So we were getting short here, and as it was taking out these levels, it did come down to 1889. Now, even though the 1883 was a point that I was watching, 1888, this thing just bounced right off. And I was extremely interested with why it just randomly stopped on the 1-minute chart at 1888. And if you haven't found out already or put the pieces of the puzzle together, over here on the daily chart, and this is interesting, and this is why important to understand how price action works over various time frames is that you can see that price action has been it's been heading lower, and it's being held down by trendline resistance. Today, price action found a low of 1888 on the 1-minute chart, and if you look at the 50-day simple moving average, it's 1889. So moving average support on the daily was the cause for this to just halt right here, oversold signals, and then it moved its way back to the upside. There's also a correlation between this turning point in gold and the fact that this was also the same turning point when the US dollar futures started to rip down to the downside, obviously. So we had this gap up, 2/3 fill. Price halted at 1888, which is a 50-day simple moving average support level on the daily chart. And then price action moved back up. And then what I was doing is actually I started watching it right through this area again. You can see that you've got this intraday head and shoulders area, which is something that I'm constantly looking out for. And did it break down? It absolutely did. But the one thing that I was looking at more importantly was this new high right here, or this, I should say, short-term high of 1931. I also made a video about this that's in the private members area. And what I did was I was actually trading this real-time live with the tape, and I put that up in the members area. And what I was doing was this price action, we got a low here, and then we got a higher low, and what I was looking at was that these lows were obviously getting higher and higher, and so this was something that I found intriguing. Price action rallied right through the VWAP, and then it flagged right through here, and that got me super interested in this. And as soon as it started to flag, I was actually in a position long with 1933 as the target, and it came through here and peaked up where we got out of that position. And we got out, if I was to zoom in right here, you'll see that there's somewhat of a pin bar right through here. So it reached a high, but it closed the lower portion of its candle, and you can see that the stochastics were already rolling over. So there's some bearish divergence for you right here. Super important that you're always watching out for this bearish divergence. So you can see that strength is coming off there, while over that same time period, price action is moving to the upside. I would always take momentum's lead, so that's something to remember for the future. But as this thing was rolling over right through here, I did sell. If I believe off the top of my head that those calls, I bought puts down through here, and I think they moved up from 50 to 70 cents within about a 7-minute window. And then right through here, I think we were buying, I want to say they were 15-cent calls, and they were in that 25-cent range. Maybe not that much. You'd have to go back and see the video in the members area, but there were calls that were bought when this flag broke out, and when it reached this top, and then by the time it reached that intraday pre-market level of 1951, I was already done and out of the market. So that is essentially the audit for the week. And we were, like I said, we were watching that S&P and the Dow and all of the markets come off earlier on in the week. There was a huge rally on Wednesday, which carried on through Thursday and Friday. And Wednesday was a short day on gold. Thursday and Friday were short days on gold. Pardon me. So Friday, Thursday, these were short days. This was a mixture of long and short. You can see that it was kind of range bound almost, and that's just what we were doing on the audit. So that is a recap of what we were looking at this week. You'll see that past videos, past audits, a little bit more broader market specific, in this case metal specific. Silver was also moving up obviously, and it was on a cost by cost basis cheaper than gold, so there was some trading opportunity there as well. But not too focused on the single skew stocks. I'm more looking for opportunities within the bigger markets, and especially gold. This thing, if you catch it at the right time, you can make a couple decent plays on this. Like today, we had two moves through here. We had one short, one long, so we took both sides of the market, and they were just brief. There's also options expiration date today, so these options were really cheap and extremely volatile, moving up 50% within a 7-minute window. So that's always fun on Fridays. Anyways, if you have any questions, feel free to email us at info@jlewistrading.com. And if you have recently went to visit our site, we are back down in the development portion of things. So we will be sending out some broad-based messages in the near future when we're up and running. But in the interim, if you have any questions, we are at info@jlewistrading.com. I hope these videos have helped. If you have any questions, feel free to email me, and thanks for watching.